Today we are going to discuss Fed and how they influence interest rates. And I'm trying so hard to not like stir up the pot, but I know Audrey does not want to get into it because she does not want to get political. so stay where you feel comfortable. But Dustin, he has an MBA in finance. And I remember when I first met him, we'd go on these long walks, and he was like so excited to talk about Jerome Powell and like blew my mind how interest rates are affected by a single person, especially when it comes to the economy and real estate. So today we want to talk about the Federal Reserve and how they influence interest rates. If you can take it from there, Dustin, and Audrey, please like jump in and get mad because I want to see that spicy flavor. She's like, look at that. That's called willpower.
Yeah. Well, all right. All this is just my opinion. But Luke probably remembers I had a professor 11 years ago, almost 12 years ago, that introduced this whole Fed concept to me. And that's when I started deep diving into it. And anyway, it's really, in my opinion, the Fed is more important than whoever is president, whoever, all the politics stuff. And the reason being is because they are the ones truly deciding how much money is being printed at any given moment. It doesn't matter Democrat, Republican, none of that. Like into that, so 1929, Great Depression, they printed a bunch of money. That was the Fed, not the president. 2008, same thing. Again, during COVID, they like quadrupled the US dollar that existed. And so the Fed, the markets aren't as capitalistic as people think. If you really just watch the Fed and what they're doing with the money, it can be as simple as that. Like as long as you're in harmony with the Fed and copying them, you're going to be good to go. So that's my short version.
Okay, well then here, let me jump in right now. I want a little bit of clarification on this. You said 2008, the Fed printed a whole bunch of money. Is that what caused the housing collapse?
It was in response to shortly after. And
Okay.
so when they print money, they buy a bunch they're buying US treasuries. And even some countries like Japan, they'll buy like corporate bonds as well. Um, and when they buy, it pushes interest rates down. They're not just like pushing some buttons to make interest rates go down. They have to buy bonds. And so when they aggressively buy with trillions of dollars, that's what actually makes interest rates go down. The Fed fund rate. And that's like the primary domino. When that interest rate changes, all the other interest rates that you see, mortgages, credit cards, auto loans, they follow suit.
Okay, so let's say regardless of interest rates, or maybe that's super correlated, high interest rates means less money printing, or low interest rates means more money printing.
So
And I have
when
a
they
point I want to make with this.
so it's like step one, the Fed ones and zeros on a screen because it's not backed by gold. They
Mhm.
say, all right, we're inventing new money and we're going to buy US Treasuries. So as they're doing that action, step one to step two, that is what's pushing the interest rates down because it's a flood of new money. Because it's called bond convexity. So when the interest rate goes down, the coupon rate goes up on the bond, and that's what they're doing.
Okay, so when they start printing a lot of money, and I believe we're in that right now, it's called quantitative easing. Doesn't that make prices of assets go up?
Yeah, yeah, that's what made the stock market during COVID explode, the real estate market, all of that. It was all that new money entering the economy.
Okay, so I know we don't have a lot of time on this, because we have a hard stop, and we appreciate all of our listeners for coming in and listening to us every day. I know we can get a little dry and a little bit passionate, and Audrey gets on us every now and then. But right now, I know they're starting to print more money. And like they did in COVID, it made assets go up. So as they print money, is that the time to assets?
Typically, I'd have to confirm if they're doing QE right now, but like they usually have a name for it when they're aggressively doing it, like QE1, QE2, QE3. And it's not just the US that does it. I'd say the better answer is when all the major currencies or central banks are all printing at the same time, which they did during COVID. It's like
Okay.
Japan, over in Europe, like they're all in harmony of slamming the gas on money printing.
All right. So my very last question, I'll let you guys all go. I bought a place in Miami on the water, overlooking the bay in a really nice building, and I bought that at the very beginning of COVID. And within a year, it more than doubled in value. Why is that?
It's Luke's turn.
This is
Or
not
I,
my
Audrey's.
area of specialty.
I can answer it. I was trying to like throw up a really nice whatever you call it so Dustin could dunk it. They printed a whole bunch of money. So I don't know if my place went up in value double or if our currency lost half of its value. But when when you buy assets, and we're stopping in 1 minute, buy assets because the government will always continue to print money. And when they do print money, your money becomes valueless. Not, I don't even know what I'm trying to say. It becomes worthless, but assets will always go up in value.
Well,
All right.
one last thing to add. This is what made me so bullish at the very beginning of co-living, is understanding that it's the money printing not backed by gold. It's making inflation aggressively climb. It's higher than what they actually report, and the need for affordable housing is only going to continue to climb. So that from the get-go, like people would ask us like, "Why are you guys so enthusiastic about co-living in real estate?" And like, it makes sense.
It's the future.
Dustin's a crystal ball.
Thanks. Thanks, guys. I appreciate all of you. Audrey, I don't know. You're a little bit mean to me today.
Not mean. Not mean. I'm the I'm making everyone be able to talk on these. Otherwise, why are we all here?
She's a LD
That's
share.
That's right.
all right,
Be a
guys.
good
I will
sharer.
I will see everyone tomorrow. Thank you so much.
Bye,
Thanks,
guys.
Mom.
Amen.